Yeah, there was a few technical difficulties, but now that there's a few guys in the room, what we'll do, we'll get it on the way. How are you guys otherwise though? How's everyone? Good. Kennedy, how are you? You good? Yeah? Okay, not to worry. Well, to kick it off for today, I just want to home on really structure and what you're looking at. I know there's a few basic rules which I gave in one or two introductory sessions, but I feel as though a lot of the clients at the moment are not taking into account fundamentals, and sometimes what they're doing is when the markets are moving against you guys, you're not understanding why and you're getting emotionally involved. Now, this is a common retail error or a common retail position where you put yourself on the back foot. Now, to give you an understanding about that, trading is all about mindset. It's all about emotion. You need to be in the game to win it. Now, if when you start anything in life, generally you have a basic understanding or incompetent understanding. It's more about winning or you fall in love with the result rather than the process. Now, the first thing I want to get across to everyone, because I've seen a few messages in the live room, I know not everyone does turn up to the live rooms because of the time convenience. We are going to try and switch that around as well, try and get a lot more of you guys in one session, but it is the best way to handle you guys all together. But the thing I think most of you guys are missing out on is just having a look at fundamentals, and one key thing is the difference between fundamentals and social news, like what you would see on Bloomberg or CNBC or BBC, for example. Just to really start off on that point today, we've got two types of news or two types of fundamentals. We've got economical data like this that you see, yeah, which is quite straightforward. You get an actual, consensus, and a previous, yeah. Previous. Now, what you're looking for here, a lot of the times, a lot of the smaller events, anything which is not really medium or high importance, won't really move the market unless it comes outpriced to the consensus quite considerably. Now, the bigger moves come in the market when you see, for example, the consensus comes out and it's in line with the previous, and then you get an abnormal figure in the actual. That's when you see the bigger moves. Now, nowadays, especially in the last 2 years after Brexit and Trump, the markets aren't really moving off economical data as much as they did, I would say personally, 2011, 2012, because you used to get 600-700 pips off a non-farm payroll. Nowadays, that's something that you need to be aware of, especially as a trader and somebody. If you want to trade throughout all market conditions, it's about going through all seasons: winter, summer, autumn, and spring, if that makes sense. Now, you always have to be aware of what kind of market conditions are like generally. Now, the only way to do that is through fundamentals. That's why I believe it's something that's massive. It needs to be pressed on. It needs to be gone through repeatedly. It needs to be put into your systems like it needs to be a process. It's just eat, sleep, and repeat. In that sense. So what I would say is, I know some of you guys, it might be a little bit boring, so I won't dwell on it for too long, but I just want to just touch on it. So obviously here, if we look at it, it's not only about seeing what economical data is about. You've got about 5 to 6 major things. You've got ECB, you've got rate decision, Bank of England, which happens on a Thursday. You've got oil inventories on a Wednesday afternoon. You've got non-farm payrolls first Friday of every month, and then you could have a speech or some kind of an event. Now, if it's scheduled, yeah, you're generally only going to get a big move if the consensus comes out. You guys already know that. Now, one of the major things that you'll see, and especially because of news, I know you guys that have been trading for a little while as well, you'll see non-farm payrolls come out, weak dollar, and the dollar's not actually weak, it's going up. Now, that's simplistic. All that's happening there is the news has come out, you've got the big spike, either to the high or the low. Let me just see if I can find you some kind of live example in the screen, for example, but this is prime example here. This wick saw coming down. Hopefully you guys can see the screen. Is news. Now, I can't 100% bet it. I can't bring up the date, but I think if you go back, there would have been either some kind of market close or some kind of news that day. Yeah, and what we see is the price come down, spike into a key level, yeah, and then it changes the order flow. Now all this does, you've got to understand the market's a zero sum game. A plays B and B plays A. Now the banks, they use the fundamentals sometimes not to manipulate, but it's a very common thing that you see. It's just a pitfall that you need to be aware of. Any type of news, you'll see it non-farm payrolls. I remember about 3 weeks ago, you had a CPI that came out unexpected, and the market spiked down 83 pips. It was clear weak dollar in the market, but the dollar was rising. All you got to understand about that is the market's been pushed into key levels where it's picked up orders. When it picks up orders, don't always remember the first rule. The market is order driven. No ego. Nobody can come to the market and be correct 100% of the time. This is the type of stuff that we need to start programming you guys with as traders, because we want you guys now to think as traders and act like traders rather than have retail mindset. Yeah, and this is crucial. So that's one thing also that you need to be aware of in regards to news. Now, looking at this calendar, you should really be able to, once you go through it quite a few times, you should be quite confident with it. Look, this week, like, there's not really much major stuff out. Now, well, we've got a few things out on Thursday. Obviously, Thursday is always a major pound day. Third week of every Thursday, generally towards the end of the month, you get the Super Thursday, or you get a lot of stuff comes out in regards to sterling on a Thursday. You've got GDP. These things could move the market. They are of low importance. They're not something that you should dwell on. They're just something that you should be made aware of. Now, one thing is, we've got
What about 1:30 today, Neil?
about 1:30 today. Yeah, is that Roger? Hi,
Yeah, was
Roger.
that the...
Yeah,
Hi.
1:30 today. Just bear with me. So today 1:30 here. Yeah. Okay. Sorry, I did brush past that. You've got in 15 minutes gross domestic product. Yeah. For the US. It's basically a figure that gross how the economy is doing, or how the overall figure is collaborated. If they work it out off a consensus of how much revenue is getting turned out. Now, generally, these type of things here, with 12:30 as well, if you get any type of unexpected in these two red events, so you see, like, for example, sake, 3.8 or 1.8, or you see on this one 2.8 or 1, for example, that's when you'll get the bigger moves. Through these market conditions at the moment, the data is not really doing anything. It's really the market fundamentals is what's driving the markets at the moment. And I think if you're looking at fundamentals and you guys want to know what is going on and what I think as a trader, the major thing that's underplaying is Trump going to get a second term. I think that's the crucial thing that is underlying playing, and that's where we're really looking for direction on where the dollar's going at the moment, because obviously the dollar's the major focal point. If you can call or predict the direction of the dollar more accurately, you'll have a better success rate as a day trader in the market, because it will give you a higher probability rate. A lot of things that I find is guys follow the strategy, especially London Open. A lot of you guys throw London Open out the window after you have a few losing trades. I've traded London Open for over 3.5 years. Statistically, it's the best strategy. It works off the back of breakouts. It's low risk. You just need to go through the process, because sometimes what happens is guys have good results and then bad results, and what you're doing there is you're falling in love with the results rather than the process. The money is just a byproduct. You just have to go through the process again and again. If you take losses or take wins, you can't be dwelled up on that. You can't let it affect your next emotional decision, if that makes sense. Yeah, Roger, did you have any other questions about that exactly, or were you just asking what they were, or what was it exactly? Just
No, it's just, is that going to be a big mover for the market? I was wondering.
Okay. If you ask me that type of question transparently, I can tell you that if I told you that I knew 100%, I'd be lying to you, and anybody that told you would be lying. Does that make sense? What I would do if I was trading, I would be wary of where my positions are. If of high importance news, you generally only want to be holding positions where your stop loss is at break even, if possible. Yeah? Okay, so you don't want to be holding through like a non-farm payrolls or rate decision unless you've got positions which are protected, because then in turn you're just gambling. You're removing the element of skill. Does that make sense? Now, that causes two problems. One, it gives a false sense of security, and sometimes you can get more incompetent and you have a very big trade, and then it puts you in a situation where you feel invincible and you lose money. Or two, you lose money and it makes you curl up like a hedgehog and you become very reserved and think you can't, especially when you're trading, you have to treat the money as irrelevant, because if you get caught up with the emotions of the capital, you're never going to make money long term. And if you ask anybody that's traded the markets physically for a long time, they will never tell you that they didn't run through a string of losses, or they didn't go through a period where maybe the strategy didn't work, the fundamentals didn't work, something they weren't getting, because there's a few elements that you need to component. My real understanding is, obviously I've traded the markets for quite a while, so my main thing is to put you guys in the positions that I've been, where I've done certain things and not seen it work, or seen it work, for example. Yeah, so I can't tell you guarantee if it's going to be a move. Looking at it, if you look at the euro, obviously that's the one that's going to move the major off the back of it. On a 15-minute, I always like to use 5 days. There's a few buy levels below and a few sell levels above, but that's quite a big range, 80 pips. I'm not expecting much big off it, but we'll wait and see. Who knows? If anything, if the figure comes up inspected, it's probably just going to stay in this range till US markets open up anyway. But that's just my view on it, if that makes sense. Yeah? Is that a bit clearer for you, Roger? Good? Good to go?
Yeah.
Perfect. Now, I know I can see a few more guys turning out in the room. Just to go through, anybody, don't feel shy. If you don't understand something, or you think, don't feel, no matter how small the question is, whatever it is, I will repeat it. I'll go through it again and again, even if it's something that we repeat. But if it's something which you think maybe you just need to do the research and you need to find the information, fundamentals is something that all the clients, especially all retail clients, need to work on, because it's really 35% of the game. If you know that something's come out and the fundamentals have changed, like for example, 2 weeks ago, on a Thursday, guys were selling the pound and Theresa May came out and gave a confident vote. You have to be aware of the news. You can't be, it's like the weather forecast in a sense, where you get a prediction, they don't always get it right, but they generally do. Does that make sense? Yeah. But when they get it completely wrong is when you get the bigger moves in the market. Yeah. The only other thing I see, really, obviously, a few other questions I get asked about what calendar do you use, this and that. I prefer economic FX Street. Forex Factory is very good. Sometimes it goes down and breaks down into consensus. Like if you don't understand certain things, like what a rate decision is or something like that, it will break it down for you. And it gives you a section, why traders care. They work very good on the higher important events. So let me just show you, for example, why traders care. So it breaks it down. It shows you why. So sometimes if you guys feel a bit embarrassed or you're not sure, just go through this type of stuff. And then obviously the basic one you want to all be going through, especially anybody that's only been trading for, let's just say 6 to 12 months, because really you need 2 to 3 years solid graft at this. You need to put the work in, because some guys pick it up in a few weeks. Some guys take longer. Some people pick it up and then lose money and get off put by it. It's the only guys that stay resilient and understand it's about the process and not the results that stay in this long term. But everything's here, like what is fundamental analysis, what is a hawkish dovish situation, how it affects it, difference between forex news, market data, like what we were just talking about, and social news. One major thing as well, which I pick up, especially with a lot of the retail clients, is that you need to be looking at things like CNBC, Bloomberg, and things like that. These type of things, what happens is you'll see sometimes that if something big comes out, like Brexit, not something as big as Brexit, but even something that could move the market or change the fundamentals, it will be on all of them. It will be on BBC, it will be on Forex Factory, it will be on Bloomberg, it will be on Reuters, it will be on all of them. Also, we've got a very, very good one on our website, which is up to date, from Duca's Copy the Bank. If you see big moves in the market, let me actually just bring it up, because just bear with me. I think this is a must for you guys. So sometimes when you see big moves in the market, and if you see people running outside your house, it doesn't mean you're going to go and run with them. Sometimes you just want to go and look and see why they're running, if that makes sense. Now, if you have a look on our trader tools, latest news, yeah, I haven't actually gone through the website and some of the tools. I will do that later on, but I think right now, let me just play on the fundamentals. If you have a look here, it's got minute by minute up to date. It's quicker than things like, if you have a look on Bloomberg, BBC stuff, it's all delayed. The FX one's quite good, and then you've got other ones as well, stocks. You guys, because mainly we're focused on FX at the moment, if the markets bottom out and we do start to look at equities, but it's also got commodities and news, it's up to date. If you start to see big moves in the market, like Trump said something, terrorist attack, it will be here first, minute by minute update. And it's always good. So sometimes if you see big moves in the market, sometimes just read the news because it understands why. If that makes sense. I know the news is always delayed, but what it does is it allows you to reposition yourself off the back of the fundamentals. Are the fundamentals sustained? Are they going to continue? Or is there a change in fundamental? Now, the quicker you can identify these type of things, it gives you extra execution. Knowing the technicals is hard to learn because there's a lot of theory behind it. But if you just trade technicals without fundamentals, it's a little bit like trading in the dark. It might work, you can get away with it, but not if you want to do it consistently time and time again. And really what I want to be conditioning you guys is on the bigger accounts, on the bigger balances. It's different when you trade a small account, when you trade a micro account, because you're winning or losing a cup of coffee. But when you trade a six-figure or £1,000,000 account and you take a 20,000 or £2,000 loss, it's a completely different understanding. Now, from my perspective, I want guys to trade six-figure accounts bare minimum, because that's where the real money is in trading, because with the leverage the upside potential is phenomenal. Now if you don't continue those contributes from day one, you're not just going to turn up and be in that mindset. It's something which you need to adapt throughout, regardless of balance size or performance. It needs to be emotionless. Now reading the news sometimes if you get a big move is crucial. Yeah, guys, did you get that? Did you guys get that? Can I just get a thumbs up just so I know that it's clear? Yeah. Any guys got any questions off the back of that? No? Good to go? Yeah. Okay. Let's get into some of the rules, which I know I tested on you guys last time. But there's a few rules before we start going into the trading and showing you the positions and stuff like that, which I know you guys are looking for. I just want to go through a few things. I'm not going to look at strategy. I just want to talk about my 4 or 5 basic rules. Now, already I've seen a few clients start to get outside of the rules. What happens generally is you take the information, you start off doing it quite well, and then you either do very well or you do very bad, and you go into either your own shell or you start to shut down, and you start to think either you know what you're doing, or you guys need to trade through the strategies for 90 to 100 days to see how consistent they are. When you trust the strategy, that's when you make money out of the market. When you're fear or timid about it, it's very hard for you to profit or take money out of the market. It's more about ego then, and if you trade for ego, I'm telling you this for free, I've lost a hell of a lot of money in the markets because I brought my ego to the table. Never look at a market and say, right, euro dollar is going to go up or it's going up, because you know why? The market doesn't care about your opinion. But second of all, the market only cares where the orders are. So if you care about calling the market up or down, if you trade for 1,000 days, you're going to run into a string of losses, maybe 20 or 30. Now, if you can't sustain yourself or keep your head in the game, then it's not going to be long term. That's why you could never call the market and say it's going to go up. You might have a clear high probability of where it's going to go, but you don't trade like that. You always trade for entry and price and allow the market to move in your favor. Now, this is the most common mistake I see from everybody, and I'm going to go through it, and you're going to hear me go through this time and time again. The first rule of trading is sell high and buy low. The reason why this is because the institutions are the guys that move the market, the big players in the market. Really, the banks are the ones that push the market around. Retailers don't have enough liquidity to move the markets. Now, the banks are not pardon my English, they're not stupid. They're not going to buy at the high and they're not going to sell at the low. It's just something that they don't do. Institutions don't buy at the high and they don't sell at the low. All they do is simplistic of any rule is they sell high, buy low. Sell high, buy low. Now, a lot of people, especially retailers, I see you guys selling at the low and then the market comes back and you're holding an offside position. Yeah, happens time and time and time again. You always have to be. Now, one thing I get asked a lot is, how do I know where this high and the low is? Yeah, let me just break some stuff down to you as day traders. Yeah, we're looking for short to medium term trends in the market. We don't care about long term trends. We understand them for fundamentals and to understand direction, but realistically, and to put the probability in your favor, but realistically, we're looking for short to medium term moves where the institutions are pushing the price around. Now, the price comes off fundamentals over a period of time when the market has confidence in a view that the dollar's strong or the dollar's weak. So, prime example of this, Trump came into power, the dollar went weak, equities went up 28% over the course of the last 18 months as soon as he's come into power. Another example of this, Brexit. We had Brexit. Now, Brexit, a lot of us guys thought we were going to stay in. I lost a hell of a lot of money off the back of Brexit. I thought we were staying in. I thought it was a done deal. I was buying the week before. The night of Brexit came out. Sunderland came out. No vote. Suddenly, thing woke up in the morning. Margin call across the board. Now, that was me bringing my ego to the table, thinking I had a dead set decision. Yeah, the market does not know until the decision is made. Now, those type of big fundamental events are not. They don't come around all the time. They're like elections, referendums. They're not the terrorist attacks. They're not. But those sometimes what happens is it changes fundamentals and it stays in the market. Now at the moment, you guys have only really been trading with us on this with here for about 6 to 8 months. Yeah, we haven't really had anything big. I think the things that we're looking out for is Brexit going to really happen? Is there going to be some kind of side deal? If you ask me, I think the Brexit problems have been pushed under the market. If I bring up a cable for you guys, continuously on a longer time frame, look what it's done. Fair enough, Brexit, fundamental weak sterling, it's gone in and found orders. Rumor has it Soros is buying from the low, but that could be a rumor, who knows. But if the banks aren't buying from down here, I don't know who is. Look at the size of the move. Fundamentally, sterling's weak, and it's done nearly the best part of ridiculous amount of pips. But so at the moment, this is just looking at two things. Fundamentally, sterling's weak. Technically, it's strong. You should always know how any asset is moving. Now, euro and cable generally move together. Only the first time they went out of sync is through Brexit. Yeah. Before 2014, they used to have like an 80 or 90% correlation. When I first started trading, the euro and the cable used to move coincidentally. Recently, because of Brexit, they're not as highly correlated. The correlation has gone down to 66% from a high probability of, I think, about 89. Yeah. Just a few things I want to touch with you guys as well. If I go through anything and you think it's questionable, or you want me to go through it again, don't be shy, guys. Just make sure you ask. I know sometimes I get carried away and go off topic as well. Yeah. So back to that. That's just me helping you guys with fundamentals. Yeah. Now, day in the life of a trader is simplistic. When you wake up, you should be reading the news before you take any position, before you take London Open. Who knows? If you're not aware of what's going on, how can you understand? So you should always be reading the news, always be keeping up to date with fundamentals. Yeah, obviously we will be letting you guys know if big fundamentals change, but at the moment there's not really much going on. I think there's stuff with Russia and Putin. I don't know, it's really hard to make off. It's like they change their minds on a week by week basis. All I know is before Hillary, when Hillary was in power, there was not Hillary. When Obama was in power, there was no ties to Russia. They didn't want anything to do with them. When Trump came in, it was like they were building an alliance. But it's like Trump is probably looking to tee up for himself for a second term, and he's turned his shoulder. But who knows? I'm not a politician. I'm not here to debate. I'm just here to look at the price and see if I can make money out of it. So, now moving on to the second rule is always use a stop loss. Yeah. Now there's two reasons why you use a stop loss. One, it emotionally takes you out of the market with no risk. Yeah. Because if you don't have a stop loss, you start to think the market's going to come back. I heard a client recently say, "Oh, if I had moved my stop loss, the market would have come back and I would have been profitable." Do you know what that means? That means you got a bad entry. Yeah. There's a few elements to trading: entry, trade management, and what happens after the fact. Yeah. There's so many times where you can have a trade moves in your favor, takes you out to break even. It can make you emotional. One crucial thing: guys that are going to make big money in trading, guys that I've seen that have not grown small accounts but stayed in the markets for long periods of time, those guys don't get held up on on a result. If whether they win or they lose, they continue the process. They understand the strategies, they understand the market, and they go for longevity rather than a situation where you have a few losing days and you give up, or you have a few winning days, give yourself a full sense of security. You need to be competent in the fact. Now, to become a professional at anything takes time. It takes practice. David Beckham doesn't kick the ball like that without kicking the ball 20 or 30,000 times. That's something that needs to be implemented with you guys as well. We can give you all the information, we can give you all the theory, but doesn't mean we can give you the practice. Some things you just have to go through on the pitch, and that's something which, as time goes on, you guys will see how better you'll get at the process. Because if I look at myself when I first started trading, 12 months to 2 years to 5 years to 10 years down the line, it's a phenomenal experience where it's like a snowball effect on the learning curve, because there's two ways to learn hard. One is to lose money. That's the hardest way to learn, because it messes up your emotions. It takes you out of the game. It puts you in a situation where you question everything. You question your strategy. That's one thing that you don't have to worry about here. You guys, I myself, because everyone asks me, Neil, what do you trade? How do you do it? I don't really put trade calls and stuff out there. I don't need to. I just trade levels and London Open. London Open works. It works tight range of Asia. You don't always get a breakout, but it's easy to get a break-even trade, 5 to 10 trades a day. And then I just trade supply and demand, because I like the movement between the levels rather than rather than dicking about in the middle of the ranges where the price can be invalidated. You get better entries at the high and low. Yeah. Now the third rule, which some of you guys are implementing, some of you guys aren't. Yeah. You never hold a losing position over a session. Does that make sense? So if you take a position in European session, and by the US session you haven't had a chance to bring your stop loss up, or it hasn't taken you out, you don't really want to hold a session over a 24-hour period. There's a big phenomenal myth about day trading, yeah, and that is the fact that people say it's gambling and it's risky. It's not. The market can never move against you a million pips in a day, so therefore it's the most risk-averse instrument. Where the gambling comes in is where you let your emotion kick in and you don't have enough capital to see if you're going to go. One thing I see a lot is guys come in, do very well on a small bit of money, and then when they scale up, they have an absolute nightmare. Yeah, that is retail problem. You have to trade through that. If it's like this, when you drive a car, yeah, if you become professional or drive in a car, the first saying that anybody says is, you don't know how to drive the car until you've had your first big accident. Yeah, and it's the same thing when I say that. You don't know how to trade until you've blown a few accounts. You need to know how it hurts so you don't do it again. That is a fact. If somebody's been a trader for 10 years, they haven't blown an account or haven't lost a few big trades, they're lying to you. It's a myth. You can't win every single trade. It's like being a footballer and not getting an injury. It's impossible. Yeah, that's another thing I want to get through to you guys. A trader's real understanding is understanding risk and understanding risk management, because risk management is crucial. If you've got no capital to trade with, or if you can't do it skillfully with a set of mathematics, a lot of guys I see on smaller accounts, they take a 500 to 1,000 and then they think they're a very good trader. You're over leveraged. Yeah, you're not sticking to risk management rules. Really, all you're doing is you're just having a punt. You guys need to follow strict disciplined rules. You need to stick to things like risk management. You need to be not chasing trades. You can't be holding any losing positions overnight. The reason why you don't hold losing positions overnight is because if every time you log in and you've got 3 or 4 losing positions to monitor, it's very stressful. You don't want to start looking at your trading platform every time with a 4,000, 5,000 pound loss and you're managing your way out of trades. That's why you don't hold positions overnight. That's why you put a stop loss. I'm not there giving you these rules because I made them up. These rules work. You build them on, it's like foundations. You build these rules on top of each other to give you skills in the market rather than being lucky. Yeah. Now, on those 3 points, have any of you guys got any questions?
No.
Okay. So, first rule, sell high, buy low. Yeah? You guys got that? Second rule, stop loss. Yeah? Stop loss. It doesn't matter who you are. Yeah. If let me tell you something, if you've got a 10 or 20k account and you don't have a stop loss and you take a 5k loss because you want to see where the market goes and some news come out, trust me, it hurts. And that's when it will affect you. On a 1 or 2k account, it's not going to do anything. But when you're on a six-figure account, quarter million, it could be the difference between a 5k loss and a difference between a 55k loss. And what you're doing then is when you lose 55k out of a 200k account and take a 25% loss, guess what you do? You're falling in love with the results. You're not falling in love with the process. Make sense or not, guys? Yeah? So the
Hmm.
rules are there to be built on top of each other. This trading is not something which I can give you a 30-minute or 1 hour session on and you're going to be a master trader. It's a journey. You've got to come along with us. And some of you guys that are smarter are going to pick up the pitfalls and put the rules in. And that's the guys that we're looking for. I'm going to be transparent about it. I'm not looking for the guys that can't follow rules, can't be disciplined, but also understand you're not always going to get it right. The market's not always going to go in your favor. Something could come out. It could be unexpected. But if you use your skills in the market more often than not, you'll see that you'll be profitable. Yeah. Now, I don't know. I know we still got a little bit of time. I know that goes off out of topic each time, but each time we go through, we'll start to cover individual topics like on psychology, London Open. Now, I want to come to London Open because a lot of people have stopped trading it. I don't know why. I think they think that it doesn't work. It's not that it doesn't work. It's that you don't know where to place your orders and you're not managing it effectively. Now, to do this, the first rule of London Open is 15-minute, 5-day time frame. The reason why, as a day trader, we're trying to catch the next trend. We don't care where the market's gone. We want to know where it's gone, but we're trying to catch the next interim trend. Now, generally, the reason why it comes down from the high and the sell high, buy low is because institutions don't buy at they don't buy at they don't buy at the high. That's why it's like a self-fulfilling prophecy. That's why a lot of people will get caught out the markets because retailers will see the market running up, and then where it's going to break here, what you're doing is you're adding liquidity for the institutions to get out of their buy, and then the price comes down, and all you retailers are sitting on losing trades here. Yeah, that's why as a day trader, 10 to 15 pips risk on a trade is more than enough. If you find out for 10 or 12 pips that you're wrong, that's good risk management in these market conditions because the market gives 30 or 40 pips quite comfortably. Now, one of the major things, I know this is going completely a little bit off topic, this is going into trade management, I do apologize, but I'm just touching on a few things which I'm getting from some of the clients or when I'm speaking to you guys. Yeah, there's two ways to trade manage once you get in the position. Once you've taken an entry and you moved your stop to break even, you're only 30% of the way there, mate. Yeah, you still got 30% in regards to trade management, and you still got 30% in regards to after the fact. Now, those two topics we will be going through in detail. Trade management is crucial. There's only two ways to do it, guys. One, study and study and study the fundamentals till you have a very good understanding, and then you understand. The market generally moves off the fundamentals, off the news. Yeah, so that's one way, or the second way, which is the way that I like to practice, and it's the way that all traders do because it's easier and you use mathematics. Is mathematically, if you open 1,000 positions in the market, 24% of them should run in your favor. So if you open 1,000 positions, 240 of them should go in your favor. Now, all you can do as a trader is check if your entry is right. No one's got a crystal ball to tell me if my entry is good here or if my entry is good there. They're lying to you. Yeah, all you can do is put the order in and see after the fact. What you do after the fact is crucial because it can play on your emotions. The market can run in your favor and give you a high, put you on top of the world, and then what happens is you take bigger risks and you end up blowing the account because your strategy is not back tested and you're relying on luck. Never rely on luck in the market. It will run out. If you sit in the market for 5 years, 2,000 days, and don't think you're going to run, when you're sitting in the market for 10 days, you might only have one losing day. When you're sitting for 100, you might only have 3 losing days in a row. When you're sitting for 1,000, you can go through 20 or 30 days where you lose every single day. And if you don't come through the fact, then what? You're going to give up because of the result. Never give up because of the result. Fall in love with the process, guys. Yeah. Now, some of the rules, the reason I'm giving them to you is because they're crucial. You need to build them on top of each other. Yeah. Now, when the price of any asset, so London Open, guys, is traded on all 5 majors: Euro dollar, dollar Swiss, cable, Euro pound, and dollar yen. That's the 5 that you guys start on because they're the most risk averse. There's also another 5 pairs that we can add, which we'll talk about later, but let's just go through the 5 basic ones for starters. Euro dollar is a little bit manipulated. It does spiky moves in the sense where it will break over a session and the price will completely reverse. The reason why is because it's got the biggest amount of liquidity in all market. This market here that you see on the screen has the most amount of volume traded through it in any 24-hour day, any market, whether it be stocks, indices, commodities, companies, cash book. This is the most amount of liquidity. So guess what? It's the one that the institutions can use to get in and out of their biggest positions without having problems worrying about fooling the retailers. So it is a little bit choppy and a little bit manipulated, but what happens is after a while you start to see the manipulation and you start to see. How many times have you guys seen market break down, or for example London Open, market break down straight into buy orders and then reverse, and it invalidates London Open? That's why you use a trailing stop, guys, in the middle of the range. Yeah, 15-minute high, low. Remember the first rule: sell high, buy low. Yeah, in the middle of the range, what you guys do, you always, my rule is simplicity. Rather than giving you what I think, I'm going to give it to you how I trade it. Yeah, in the middle of the range, order above and below, 1.5 pips either side. You've got a few outcomes. One, you get triggered on both sides. Yeah, could take 2 losses. 2, a lot of the time you get triggered one way, taken out for break even. Worst case scenario, you get triggered and lose both ranges. Yeah. So if you're starting out small, do it on small amounts to start out with. But realistically, on 10k, you should be doing 2 lots apiece. Yeah. So you should have 2 lots apiece, and then it's easy. Now, the reason why it works, I know you have to get up, but you've got London Open, US Open, and Tokyo Open as well. Sometimes if London works well, US is invalidated. If Tokyo works well, London will be invalidated. Sundays, Tokyo works very well. Yeah? Okay? These are just things, the more and more you trade them, the more and more confident you guys are going to get with them. Yeah? Now, when it's in the middle of the range, you've got to be very wary, because what happens is supply and demand. London Open happens, but it breaks into the ranges, and that's when it flitters about. Yeah, guys? Make sense? Now, in the middle of the range, that's when the orders get invalidated. These are the levels which you need to be less wary of, and they don't hold up, and they put you. When you understand that the levels at the high and the low are a lot more trustworthy, doesn't mean you don't take the ones in the middle. You just take them with a little bit more caution. Because sometimes ones from the middle give you better swing. Because if you get a good entry, the price doesn't come back. Yeah, I heard a client the other day say that he's going to stop taking them from the middle. Don't just do something for the sake of doing it. Follow the rules that we say. Follow the process. The results will show after. Yeah, there's a reason why we follow the rules, because we know that they work. We haven't made the rules up. The rules are
Neil, I've been taking Tokyo and London every day.
That's fine. That's not a problem. And how has it been working?
Is it okay?
Yes, of course.
Yeah, it's working fine. Yeah.
As long as the
But you just said there that if Tokyo works well, London's invalidated.
If the range is over 20 pips. Do you understand?
Right.
Yeah, I know me and Paul have slightly different rules. Just a few things. So if something contradicts, obviously they have a little bit of discretion as a driver. But I like ranges under 20 pips. That's just me.
Okay.
Yeah. But that's why things like, just to give you an idea, Euro Pound, the range is ridiculous. Euro Pound, you can do 2 lots, no problem, either side, because it's only moves 5 or 10 pips. The range is small. On Euro Dollar, it's a little bit wider. Cable, it's a little bit wider as well. But where the ones that are a bit choppier or a bit wider are things like Aussie dollar and stuff like that. Yeah. So I don't want you to go. Well, it depends what, because there's always obviously different learning stages. I know a lot of you guys, a lot of the guys that trade the cross pairs, they don't turn up to the live rooms. Obviously the live rooms are service. It's more for the new guys rather than the guys that know how to trade. If that makes sense, because some guys just utilize us for the rebate. So sometimes when you trade the cross pairs, the ranges are wider. So do you know what that means? You just need a bigger account. That's why you learn on the smaller pairs first. It's a lot more risk averse. Mathematics. Make sense, guys? Yeah? But once you get
Hmm.
confident, you can go across the board. But realistically, you can cross trade these euro dollar and dollar Swiss trading in indirectly. Cable goes with them. Dollar yen generally goes against, and then so there's you can couple them as well later on. Yeah. Okay. But
Hmm.
do stick to the majors because the majors are the ones which are you get the best risk reward. But if when you start to trust the levels and try to start to trust supply and demand as well as London Open, the reason why it works is because you have discipline in your trading. You're not sitting there just burning the account away, taking endless amounts of levels or understanding, seeing a bullish engulfing pattern or something like that. You're trading with a system and set of rules. I will play on the set of the 4 or 5 rules I have time and time and time and time again until you guys get sick of it. Because if you don't have those rules, you'll never stay in the market for more than 6 months. If you do stay for more than 12 months, you'll be lucky. But if you want to stay in the market for 5 years, you need to know this stuff. Yeah. So I know it's overrunning, and I know I got a little bit off topic, but I just want to give it a little bit of a summary. Yeah. Okay, guys. So sell high, buy low, must. Yeah. Okay. 2, always use a stop loss. Yeah. 3, never hold a losing position over a session. Yeah, you only hold trades where your stop loss is at break even. So when you come back and you log into your trading account or you check your MT4 on your phone, you're logging into something that's green, it's happy, it's in. Also, you guys need to look at psychology and mindset a lot. We're going to go through this time and time again, but psychology and mindsets thing. Winners win and losers lose. You need to be putting yourself in a situation where you've got a winning mindset. If you think, oh, you're a bit timid or you're a bit shy, the market's going to take your money. And I'm going to be honest with you. I've seen it time and time again. I've seen retail clients. I've seen guys come in, learn how to trade. I've seen guys do fantastically well on the demo. As soon as they start a live account, they lose a bit of money and that's it. It's not for them. That's a bit of a myth. You need to be able to condition yourself. You need to be risk managed. You need to understand it's not about losing. It's about losing gracefully and not letting it affect your next decision. That's the thing that I want you guys to get out of, because I think a lot of you retail guys, what you do is you have a good trade or a bad trade, you let it affect the next decision. You have some bad London Open trades, you stop trading London Open and you just start looking at supply and demand. You want to trade London Open to create discipline, good strategies, good risk reward. Yeah, and then you want to trade a few supply and demand levels. It won't allow you to burn the account. You won't be burning away, but you'll do the volume and you'll make good money out of the rebate as well as the growth. That's how you trade. You don't just sit there and just click the button and burn. The way where I come from, I'm not too sure if you guys know a little bit about me, but I studied law at uni and then I went into finance. Now that's quite a hard thing to break into because obviously law's got nothing to do with finance. So even though I had a degree in it, it was quite harder for me to get in the market. So as somebody that's been a professional within the industries, I've sat in everything. I've sat as a broker, I've sat as a prop trader, and I've even sat in a situation where we're managing clients as well. So in that sense, I know a lot of the retail pitfalls. The major things happen is guys get scared because they have a few losing trades or they have a few winning trades, giving themselves false sense of security, and then basically falling in love with the result. Never fall in love with any result. Always keep going. And that's the crucial thing. I see some stuff in the group, guys thinking they should, I want to win. Listen, the market doesn't care if you want to win. The market doesn't care who you are. It's not objective whether you've got brown hair color, whether you're blonde, blue eyes. The market does not care. Guess what? The market just cares where the orders are. And it is zero sum. So there is manipulation as well. These are the type of things that we're going to go through. And they're the type of things that you need if you want to come and sit at the table 6 figures or get investor funds at 6 figures, because you need to understand this. You need to understand how the market moves. You need to breathe. You need to understand how it breathes. And each market is different. There's only a few currencies on here. There's other things you can trade as well. You can trade things like oil, gold, pound, yen. Is the thing that I know all my friends, like my trader friends, everyone trades pound yen, but you need a big account. It can rip you or it can make you. And if you can't understand the emotion or understand the risk, newbie guys, stay away from it, because what it's gonna do is gonna give you a false sense of security. But once you get really good, you can trade it. The thing moves, it doesn't come back. You just need a big account. So it's right now with a lot of you guys, especially guys that plug into the library, it's about going through the process. Don't have any ego thinking something's too small, something's too big. A lot of you guys have got my number. If not, we're going to be doing sessions one-on-one with you guys anyway. Make sure you guys don't ever feel. So I know sometimes I'm not as active in the group, but that's because I'm just trading away. I just prefer to trade rather than I'd rather teach you to fish than give you a fish. if that makes sense. I know we've got a few minutes left. I know we did start. Is there anything that I've touched upon that you guys have got questions with, or just like little question 8 answers? Anything that you guys want me to pick up in the next like sessions or two? We're going to go through. I've only touched on some basic things. Anything that you guys want me to keep an eye out? Any questions? Go ahead now.
I have to go, Neil. All the best.
All the best, Roger. I'll speak to you soon. Yeah? Anyone else? Kennedy, Patrick? No? Okay. While we got some time then, let's just do let's just back to London Open, 15-minute time frame, yeah? We have I got completely off topic there. I do apologize. 15 minutes, what you're looking for, yeah? High and low. When the price is in the middle of the range, guys, yeah? Thanks, Jay. When the price is in the middle of the range, 1.5 trailing pip stop. Either way, I don't care if it breaks, if it doesn't. What you'll find here is a lot of the time you'll just get taken out for 1.5 pips. Very rarely will you get both executed and lose if you do, but sometimes it does happen a few times in a row. Doesn't mean you stop trading it. Doesn't mean you give up. Doesn't mean you start trading supply and demand or trading some bullish and gold. These strategies, let me just tell you something, guys, yeah? We've back tested them. We know they work. London Open is the highest accuracy trader. As a trader, you need movement. If the market doesn't move, you can't make any money. That's why you get the best moves. You get the best risk reward of it. That's why you trade it. We don't trade it because, oh, we have to wake up early or because we think it works. We know it works. It works off the fact. The reason why I trade supply and demand, guess why, guys? The market's order driven. If you can understand where the orders are, there's a few things, 1 or 2 concepts, because I always like to give you guys something to stay in tune about, yeah? Institutions, when they trade, they have a major problem, difference to us, to me and you. They got open a position for 1 million lots, not 1 lot. Yeah. So what they do is they build positions, but don't forget the banks can see where all the banks are placing their orders. So what they do is they buy 1 million lots here, then they buy 2 million lots here, then they buy 3 million lots here, then they buy 4 million lots here, then they buy 5 million lots here. Now they're aggregated long 5 million lots. Guess what? Everyone thinks the market's going to go long. You're just providing liquidity for them to get out of their big position. And now a lot of retailers are sitting on. Now this is the type of things I want to get you guys aware of because it's typical. It's called liquidity pools. And these are the type of things, if you want to trade big term, long term, it helps with in-trade management and stuff, like swing highs. Guys are going to be like, how have you got in there and your stop loss is up there and the market hasn't taken you out? It's not luck. It's just the process. You've got to keep going through the process. Mathematically, if I open 100 trades and 22 of them run in my favor, I should have 1 or 2 on the screen if I've been trading for 30 or 60 days consistently. And that's what you guys need to understand. You need to use your trading account as a vehicle. If you have a bad experience with a woman, it doesn't put you off women completely, does it? So same way, if you have a bad experience with your trading account, it doesn't put you off. You need to understand it, work on it. People that are going to trade at the biggest scale or trade for the big money, they eat, sleep, and breathe the market. Myself, like if I don't look at the markets for a day or two, I feel lost, and that's me being completely transparent with you guys. Yeah. So back to the London Open. Now, when the market is at the high or the low, this is where the difference occurs. Yeah. What do you do at the high, guys? You sell. So counter trend, 4 to 5 pips trailing stop, yeah, is on the sell, not the buy. You can still put it on the buy, 1.5. But what you find there is a lot of times it will just take you out for break even. A few days ago on Euro Pound, we got that break where it was on a 15-minute low. Yeah, this was it, and the market still came down and tanked. Yeah, it does happen from high and lows. It does go through, but it's got high probability to come back because of the self-fulfilling prophecy. The times it goes through like this is fundamentally driven. You know the market's driven by fundamentals. If the market's not respecting levels and bouncing back, check the news. The market's moving fundamentally. If it's not moving fundamentally and moving technical, that's when mean reversion works very well. Yeah. Just to break on 2 aspects as well, and I don't know if I've touched on this with some guys or not. It's like going out in the winter or the summer. You're not going to go out in the summer in a coat and a scarf. You're not going to go out in the winter in shorts. You need to understand if you're fundamental or technically driven or getting driven by market sentiment as well. Yeah, that's the only 3 ways the market moves: technically, fundamentally, and by sentiment. Anything else, well, nowadays you've got a massive influence of algorithms as well, but anything else is a myth. Yeah, okay. Now, Any questions, guys? Because I know it's going to wrap up soon and some guys are going to pop out. There's not really. Is there any questions, you guys? Okay, let me just. So, coming back to London Open, I'm just going to finish this off, yeah, for London Open. 15-minute, 5-day, yeah? Now, when it's at the high, you want to be putting the longer trailing stop on the sell, 1.5 still on the buy. Guess what, guys? When it's at the low, you want to be putting the buy as the 3 or 4 pip trailing stop and the 1.5 pip on the sell. Make sense, guys? Yeah? Now, 15-minute, 5-day range gives you intermittent trend. When the price is in the middle, guys, be wary. The price will go into supply and demand levels and invalidate. That's where you get the choppiness. This is a tug of war between buy and sell orders. Anywhere in the middle of the range is a tug of war. Yeah? Tug of war, what I mean by that is all the price does is simple. Sell orders, buy orders, sell orders, buy orders, sell orders, buy orders, sell orders, buy orders. In the middle, it doesn't know which way it's going to go. That's why it's better to sell at the high and the low. In the middle of the ranges, you get good entries, go smaller volume because otherwise you can draw your accounts down quite quickly. The better entries come at the high and the low. If you just do London Open and take 5 setups to 10 setups off that and 10 setups off 5 setups during the day of some pending orders, that's enough to do 20 trades a day action-wise. If you've got a 100k account, you can do 10 lots. That's 200 lots a day. Yeah, that's the type of volume that you guys like in industry, like where I come from and where I come from, experience of prop traders. Yeah, these guys are thirsty for money. They're hungry. If they're going to make it out of rebate or they're going to make it out of growth, who cares? These guys are just about money. They want to make money. That's how traders link. You need to be ruthless. You need to be calculative. Yeah. So when it's in the middle of the range, that's when it gets invalidated. Yeah. Worst case scenario, you're going to get banged out either side. That will only happen out of 100 days, like 5 or 10. You might get a few of those in a day, but that's because you guys stop trading the strategy. If you keep following the rules, you'll see it works phenomenally well. Yeah. All right, guys. What I'm going to do, I'm going to wrap up for today. Yeah. You'll be hearing a lot more from me. We're also going to do some consensus, see if we can get, because we've got a lot more clients, but not a lot of guys are logging in. So I'm going to see if I can get something done to get some better time frames, maybe an evening session going or something like that. We will be doing individual personal one-to-one sessions as well, but I do like to get you guys all in the live room at one time because it obliterates a lot of problems. I do apologize for today's technical difficulties. We had a few problems with the PCs earlier. Everything's back on anyway. We're still going to go through supply and demand, a lot of things on psychology and things like that. But yeah, don't worry, Roger. Sorry, Patrick. We're going to get I'm going to get something put together. We'll do some other sessions and we're going to do some live trading as well. I'm going to show you entries that I take as well. I just want to drill through some of the basics, which are, I think, more important than looking at any of the trading at the moment, because sell high, buy low, stop loss, holding positions overnight. I heard a client the other day say that the market moved against him. If I'd held it for 2 days, I would have won. No, your entry was bad. You've got to understand there's 3 parts to trading: entry, trade management, and thereafter the fact. Yeah, so stay tuned, guys. We're gonna got a lot more to go through. Any questions, any queries? Also, rebates are coming up, end of the month. Rebates, invoices, guys that are eligible. So I know some guys are on smaller accounts. I know there's a few big guys as well, and probably not in the room, that are eligible as well. Make sure you guys get the invoices in. I'll get them all processed. I think I'll wrap it up like that for today, and we'll speak soon, guys. Yeah, is that all? Thanks, guys. Bye.
Cheers.